Let's get oriented. I'm Lázaro Ulloa, owner and founder of Ulloa Financial, and this is your weekly recap for Friday, February 20th, 2026. Before we dive into the why, let's look at where we landed. It was a week of recovery. The S&P 500 finished at 6,909, up a full percent for the week. The Nasdaq led the way at 22,886, jumping 1.5 as tech caught a massive late in the week bid. The Dow Jones gained a modest 0.25% to close at 49,625, and the 10-year Treasury yield stayed firm, closing at 4.08, a sign that a good bond market is still bracing for sticky inflation. We saw this relief play out in real time across the tape. E-commerce giants like Amazon and Shopify led the change, with Shopify jumping over 4.5% on the news. In the retail space, while Walmart remained cautious due to broader macro noise, we saw strength in names like Ralph Lauren and TJX as the market began pricing in a massive reduction in landed costs for their spring inventories. On the tech side, the Nasdaq rally wasn't just about tariffs. It was about a massive show of confidence in the AI ecosystem. NVIDIA was back with the spotlight today following reports of a potential $30 billion stake in OpenAI, helping the stock anchor that 1.33% gain we saw in the index. What happened in this week? Well, markets began the week in a defensive mode, continuing to digest the pullback from the February 10 through the 13 stretch. Early sessions were defined by cautious positioning, with investors looking for stabilization as tech struggled to find its footing and small caps tried to build on relative strength. The narrative shifted dramatically today. The Supreme Court's 6-3 ruling to strike down the administration's sweeping IEEPA-based tariffs served as a massive relief catalyst. This decision effectively removed a significant trade tax overhang, triggering a sharp relief rally in tech and retail that helped the major indexes finish the week in the green. Now, while volatility remained elevated compared to early February levels, we did not see panic selling. Instead, this week was more about consolidation and sector rotation than broad liquidation. Treasury yields stayed a key driver. Markets are still reacting to shifting expectations around inflation trends and potential Federal Reserve policy adjustments. Even with today's rally, leadership remains selective. So the big takeaway, the bigger story right now is not prediction, it's participation. When markets test rebound, we want to see broader participation, not just one or two large names carrying the indexes. Today's legal pivot gave the average stock a reason to join the move, but we're still in a digestion phase. In these moments, discipline matters more than emotion. So what am I watching for next week? First, market breadth. Are more stocks joining the move, or was today's rally a one-off reaction to the SCOTUS news? 2, interest rate movement. Bond yields continue to influence tech and growth positioning as the market weighs sticky inflation data. And 3, sector leadership. Does technology regain permanent control with the tariff threat diminished, or do small caps and cyclicals continue to rotate into strength? Stay oriented, my friends, and elevate your legacy.